Section 148 of the Companies Act contains provisions relating to appointment of auditors and other allied matters, and hence the name of the chapter is Company Audit. How to appoint auditors of a company and other allied matters have been discussed in a chapter called as Company Audit, wherein we are going to have a discussion about 11 sections under Company Audit, that is from section 138 to section 148 of the Companies Act. Now let us start our discussion with section 143 subsection 1 of the Companies Act. 143 of the Companies Act, particularly section 143 subsection 1 of the Companies Act. Section 143 subsection 1 of the Companies Act contains both the rights of the auditor as well as the duties of the auditor. This section is a unique section in the sense that it contains both the rights of the auditor as well as the duties of the auditor. Whenever you are appointed as the auditor of a company, what are the rights that you will get from the Act and what are your duties? Everything about auditors' rights and auditors' duties under Companies Act have been given under section 143 subsection 1 of the Companies Act. Previously, the auditors of the company were called as statutory auditors. Previously, the auditor of a company were called as statutory auditor, but now the auditor of the company is being called as company auditor. They both are one and the same. In most of the cases, I use the term statutory auditor. Whenever I use the term statutory auditor, it means nothing but a company auditor. So what are the rights given by the Companies Act under section 143 subsection 1 of the Companies Act? Right number 1 is right of access. Right of access to books, vouchers and other relevant records. Other relevant records. This is right number 1 given to the company's auditor. Right of access to books, vouchers and other relevant records. First of all, try to understand why these rights are given to the auditor of the company. You know very well that as an auditor, you need to form and to express an opinion on the financial statements. In order to express an opinion, first of all, you need to check the correctness of the trial balance. Then you need to check, in order to ascertain the correctness of the trial balance, it is dependent upon the correctness of ledger. Correctness of ledger is dependent upon the correctness of journal. So unless you verify journal, ledgers, subsidiary books, etc., it is not at all possible for you as an auditor to form an opinion about the truthness and fairness of the financial statements. Therefore, if you want to express an opinion, you should be given a right of access to books, vouchers and other relevant records. Thereby, you can check the books and other related records. You can form an opinion. The opinion so formed can be expressed to the users. So, auditor can discharge his primary responsibility of forming and expressing an opinion only when he has been given a right of access to books. That is the reason why the very first right that is given to the auditor of a company under the Companies Act is right of access to books, vouchers and other relevant records at all times. At all times. Here the term all times implies only during working days, that too during business hours. Only during working days, that too during business hours, the auditor can have an access to all the books, vouchers and other relevant records maintained by the company. As already said to you, Section 128 of the Companies Act deals with maintenance of provisions relating to maintenance of books of account and other related records, wherein I told you that company is required to maintain its books and other related records at its registered office. So during working days, that too during business hours, as the statutory auditor or company auditor, you are always having a right of access to books, vouchers, and other relevant records. So at all times here implies only during business hours. Let us assume that the business hours of the company is from 9 a.m. to 6 p.m. So in between 9 a.m. to 6 p.m. you can have an access to books, vouchers, and other relevant records anytime during the period of 9 a.m. to 6 p.m. That too only in working days. That is the meaning of the term at all times. Now let us focus on books, later on vouchers. What is book? The term books maintained by a company can be classified broadly. The term books maintained by a company can be classified broadly into three categories. The first one is statutory books. The second one is statistical books. The first one is statutory books. The second one is statistical books. And the third one is memoranda records. Repeat. Books that are generally maintained by a company can be classified broadly into three categories. The first one is statutory books. The second one is statistical books. The third one is memoranda records. What are statutory books? As statute, a law can also be called as a statute. Law can also be called as statute, and hence any book maintained as per the provisions of any law, any book maintained as per the provisions of any law for the time being in force can be technically called as a statutory book. Any statutory book maintained by a company can be verified by you as the auditor of that company. As already said to you, without giving a right of verifying the books, how it is possible for you as an auditor to form an opinion? When you are unable to form an opinion, how it is possible for you as an auditor to express an opinion? So in order to discharge your primary responsibility, you should be given a right of access to books. That is the reason why right of access to books is given. What are books? Books are of three types. The first one is statutory books. Second one is statistical books. The third one is memoranda records. What are statutory books? Any book maintained by the company under your audit, under any law for the time being in force, can be technically called as a statutory book. I will give you some examples of statutory books that are generally maintained. Statutory books that are generally maintained under the provisions of the Companies Act. The first one is Register of Shareholders, otherwise called as Register of Members. The second one is Register of Debenture Holders. The third one is Register of Charges. And the fourth one is Minutes Book. These are all said to be the best examples of the statutory books that are required to be maintained by every company. I know very well that you are having good knowledge about the terms Register of Members, Register of Debenture Holders, Register of Charges, Minutes Book, etc. These are all may have been learnt by you under corporate and other laws. So, any book maintained by the company as per any law for the time being in force can be accessed by you as an auditor. That is point number one. The most important one here is Minutes Book. Why? Because you will come to know about the activities of the company only when you have been given a right of access to Minutes Book. The minutes may be of the minutes of the board of directors or even the minutes of the shareholders. In other words, minutes of the meetings of the board of directors as well as minutes of the meetings of the shareholders can be reviewed by you as an auditor. You can have an access to the Minutes Book maintained either in respect of board meetings or even in respect of general meetings. You know very well that general meetings of a company general meetings are nothing but meetings of the shareholders. They are divided broadly into two categories. The first one is annual general meeting. The second one is extraordinary general meeting. So whatever be the meeting, whether it be the meeting of the board of directors or it be the meetings of the shareholders, the auditor of a company is having a right of access to minutes of both the board of directors as well as the shareholders. In future, we will come across some audit procedures wherein the auditor is required to review the minutes of the meetings of the board of directors or minutes of the meetings of the shareholders. If you want to review the minutes of the meetings of the board or shareholders, first of all, you should be given a right to have an access to such minutes. That is the reason why I am clearly specifying you that minutes includes both the minutes of the meetings of the board of directors as well as the shareholders. So, now you know very well about what are statutory books and why the auditor of the company has been given a right of access to such statutory books. So what is the first right? Right of access to books, vouchers and other relevant records at all times. At all times here implies only working days, that too during business hours. For example, Sunday is a holiday to the company. It is not a working day to the company. In that case, as an auditor, you cannot insist the company to provide books and other related records to you because it is not a working day. For some types of companies, even Sunday may be a working day. The best example is a chit fund company. A chit fund company will operate its transactions on Sunday, but Monday is a holiday to a chit fund company. If you were the auditor of a chit fund company, when Sunday is a working day, you can obviously verify the books and other related records on a Sunday because it is a working day and is not a holiday to the company. This is about at all times. Then we started having a discussion about what are books. Books are of three types: statutory, statistical, memorandum. Statutory books, the following are the best examples of statutory books. First one is register of members, otherwise called as register of shareholders. The second one is register of debenture holders. The third one is register of charges. And the fourth one is minutes book. Minutes may be of the minutes of the board of directors or even of the shareholders. It may be minutes of either annual general meeting or an extraordinary general meeting. Being an auditor of a company, you are always having a right of reviewing, verifying, accessing the minutes of either board of directors or the shareholders. This is all about the term statutory books. Although the term statistical books is used, it was nowhere defined in the Companies Act. You can just leave it. And the third one is memoranda records. The term memoranda records includes stock records as well as cost accounting records. The term memoranda records includes stock records as well as cost accounting records. You know very well that every organization, including a company, may maintain a separate register to have a control over the quantities of stock held by them. That register is technically called as dash register, stock register, which will contain the quantities of stock. Therefore, when an entity under your audit, including a company, is maintaining a stock register, being an auditor, you are not only having a right to verify books of account as mentioned under section 2 subsection 13 of the Companies Act. What were the books that were mentioned under section 2 subsection 13 of the Companies Act? In the previous session, I explained you the definition of books of account as given under Companies Act 2013. Under section 2 subsection 13 of the Companies Act. What is the definition that I have given for the term books of account? The term books of account includes every company is under obligation to maintain such books of account which should contain details relating to all sums of money received and expended, all purchase and sales, all liabilities and assets, and where it was directed by central government to maintain cost accounting records. Then such cost accounting records, if any maintained by the company, shall also form part of books of account. That is the reason why I said that. So the books that are being maintained by the company under section 2 subsection 13 of the Companies Act can be accessed by the auditor. Apart from that, any other statutory book maintained by the company. And the term memoranda records includes stock records as well as cost accounting records. I already explained to you that according to section 148 subsection 1 of the Companies Act, sometimes central government may direct a company to maintain cost accounting records apart from maintaining financial records. In that case, the company is under obligation to maintain both financial records as well as cost accounting records. So where the company under your audit maintains cost accounting records, although you are the financial auditor, you are not the cost auditor of the company. You are the financial auditor of the company. But still, as a financial auditor of the company, you are always having a right of access to the cost accounting records maintained by the company. When you were the financial auditor of the company, why you have been given a right of access to the cost accounting records? There is a logic behind this. You know very well about CARO, Companies Auditors Report Order 2020. According to that, as an auditor, you need to verify and report on 21 matters. You need to make an inquiry about 21 matters under CARO, then you need to make a report. One such matters to be inquired by the auditor under CARO 2020 is about cost accounting records. According to CARO 2020, if you were the financial auditor of a company, and if the company under your audit is required to maintain cost accounting records, I repeat, if you were the financial auditor of a company and the company under your audit is required to maintain cost accounting records also. When a company is required to maintain cost accounting records, if it was so directed by central government under section 148 subsection 1 of the Companies Act. Are you able to follow me? What section 148 subsection 1 says? What section 148 subsection 1 says? According to section 148 subsection 1 of the Companies Act, sometimes central government may direct a company or companies operating under a specific industry to make and maintain cost accounting records also, apart from maintaining financial records. Financial records are compulsorily required to be maintained. Apart from maintaining financial records, the company may be made responsible to maintain some more records called as cost accounting records. When central government so directs, it becomes an obligation. When central government so directs, it becomes an obligation on the part of the company to make and maintain cost accounting records. That is point number 1. Point number 2, under CARO 2020, as an auditor of a company, you are supposed to check 21 points mentioned under CARO. Out of those 21 points, 1 point reads like this: where the company under your audit, where the company under your audit, you are the auditor of the company, and the company under your audit is under obligation to maintain cost accounting records, because it was so directed by dash. It was so directed by dash central government under section dash 148 subsection 1 of the Companies Act. So where the company under your audit has been directed by central government under section 148 subsection 1 of the Companies Act to make and maintain cost accounting records, it becomes an obligation. It becomes an obligation on the part of the company to maintain cost accounting records. It is the duty of you as an auditor of the company to verify whether the company under your audit is maintaining, whether the company is under your audit is maintaining cost accounting records in accordance with the directions given by central government. So what is your duty as the statutory auditor, otherwise called as company auditor, otherwise called as financial auditor under CARO? I repeat, what is your duty as a statutory auditor or company auditor or financial auditor under CARO, where the company under your audit has been directed by central government to make and maintain cost accounting records? It is your duty as an auditor to check whether the company maintained cost accounting records in accordance with the directions given by central government. In order to check whether the company maintained cost accounting records or not, you need to be given a right of access to cost accounting records. Without giving that right, is it possible for you to go through cost accounting records? Without going through cost accounting records, is it possible for you to make a comment whether the company is following the directions given by central government under section 148 subsection 1? No. That is the reason why, although you are the dash auditor, Although you are the statutory auditor or company auditor or financial auditor, you have been given a right of access even to the cost accounting records maintained by the company. But remember, you are not expected to carry out a full-fledged audit of cost accounting records. You are not responsible for conducting audit of such cost accounting records. You have been given a right of access to cost accounting records to ascertain whether the under your audit is actually following the guidelines given by is actually following the directions given by central government in respect of maintenance of cost accounting records. To make a comment on that, you need to go through cost accounting records. To go through cost accounting records, you have been given a right of access to cost accounting records. You are not expected to carry out a full-fledged audit or in-depth audit of cost accounting records. This is all about right of dash in respect of dash. Right of the statutory auditor in respect of access of cost accounting records maintained by the company. You have been appointed as the auditor of A Limited. Let us assume A Limited has been directed by the central government to make and maintain cost accounting records. During the course of performance of audit, you want to have an access to the cost accounting records maintained by A Limited. A Limited refused to provide access of cost accounting records to you on the ground that you are merely a financial auditor and not a cost auditor. Do you agree with the contention of A Limited? Should I repeat my question? You have been appointed as the auditor of dash A Limited. You were the financial auditor or company auditor or statutory auditor of A Limited. During the course of performance of your audit, you came to know that A Limited has been directed by central government to make and maintain cost accounting records. In such case, what is your duty? You need to check whether the company had really maintained cost accounting records in accordance with the directions given by central government. For that, you need to go through cost accounting records. In order to go through the cost accounting records, you asked the company to provide access to cost accounting records. The company denied access of cost accounting records to the auditor on the ground that you are not the cost auditor of the company, you are just after all financial auditors. Therefore, we do not want to provide access of cost accounting records to you. That was the answer given by the company to the auditor concerned. If you were the auditor, do you agree with the contention of the company? That is my question. Have you understood my question? Good, very good. Do you accept the contention of the company? No. Once you were appointed as the statutory auditor, once the company is maintaining cost accounting records in accordance with the directions given by the central government, you are always having a right of access to such cost accounting records to make a comment under CARO. That is the reason why, although you are a dash auditor, you have been given access to dash. Although you are the financial auditor, you have been given access to cost accounting records. This is case number 1. Case number 2, you were the auditor of A Limited. During the course of audit, you came to know that the company has been directed by central government to make and maintain cost accounting records. Now, the auditor of A Limited wanted the company to provide cost accounting records to them, but the company denied access of cost accounting records to the auditor on the ground that some other person has been appointed by the company as the cost auditor of the company. As the cost auditor of the company under section 148 subsection 2 of the Companies Act. So company appointed you as the financial auditor, company appointed some other person as the cost auditor. What is the objective behind appointment of the cost auditor? For conducting audit of cost accounting records. You were appointed for conducting audit of financial records. That person has been appointed for conducting audit of cost accounting records. During the course of performance of audit, you want to have an access to the cost accounting records. The company denied access of cost accounting records to you on the ground that some other person has already been appointed as the cost auditor. He will verify the cost accounting records. Therefore, we could not provide access of cost accounting records to you. That was the response given by the company to you as an auditor. Do you agree with the contention of the company? No. Although a separate auditor has been appointed as the cost auditor, it is our duty to make a comment under CARO in order to make a comment under Caro, you must have to go through the cost accounting records. In order to go through the cost accounting records, you must have been given a right of access to the cost accounting records. So in every case, when the company is maintaining cost accounting records in accordance with the directions given by the central government, the company cannot deny access of cost accounting records to the financial auditor. The company must have to provide access of cost accounting records even to the financial auditor. Now I want to ask you one more question. You were appointed as the auditor, as the cost auditor of a company, not as the financial auditor. You have been appointed as the cost auditor of the company. During the course of performance of his audit, the cost auditor wants to have an access to the financial records maintained by the company. Now, should the company provide access of financial records to the cost auditor? The answer is yes. Why? Because being a cost auditor, sometimes you may be forced to prepare a statement called as a reconciliation statement, reconciling costing profit with financial profit. In order to prepare a reconciliation statement between costing profit and financial profit, you must be in a position to identify the reasons why there is a difference between the profit as appearing in the costing profit and loss account and as appearing in the financial statements. For that, you need to go through the financial records to identify what was the treatment given in the financial records and what is the treatment given in the cost accounting records. Therefore, this right is reciprocal in nature. Financial auditor can have an access to the cost accounting records, and cost auditor can also have an access to the financial records for the reasons already explained to you. This is about point number 1. So what is the first right given to the company's auditor under section 143 subsection 1 of the Companies Act? Right of access to books, vouchers and other relevant records at all times. The term books includes statutory books, statistical books, memoranda records. The term memoranda records includes stock records and cost accounting records. Apart from books, any voucher maintained by the company. You know very well about what is a voucher. Voucher is nothing but any supporting documentary evidence available in any form. It is called in a written form, is called as a voucher. So as an auditor, you can go through all the books and other related records maintained by the company. You can go through the vouchers and other relevant records, if any, maintained by the company to form and to express an opinion on the financial statements. This is about right number 1. Now let us have a discussion on right number 2. This is somewhat time taking. If you are conversant with AS 13, it will be very much easier for me to explain right number 2. If not, it may be difficult for me, time consuming for me to explain you right number 2. So first of all, I will try to explain you what is mentioned in AS 13 so that it will be easier for us to complete point number 2. You know very well that valuation of investment is dependent upon classification of investment. Yes or no? You know very well that classification of investment is dependent upon the objective behind purchase of investment. Yes or no? Objective behind purchase of investment may be either a long-term objective or a short-term objective. If the objective behind purchase of investment is a long-term objective, then such investments shall be classified as long-term investments. If the objective behind purchase of investment was a short-term objective, then such investments shall be classified as current investments. So, classification is dependent upon the objective. Then, if the investments were classified as long-term investments, they are required to be valued at cost. If investments were classified as current investments, they are required to be valued either at cost or at fair market value, whichever is lower. You know these things very well, and I am sure everyone is having good knowledge about this. Right. I repeat, valuation of investment is dependent upon classification. Classification is dependent upon objective. Objective may be either a long-term objective or a short-term objective. If the objective was a long-term objective, you need to classify such investments as long-term investments. If the objective is a short-term objective, then investments are required to be classified as current investments. If you classify your investments as long-term investments, they are required to be valued at cost. If you classify your investment as current investments, they are required to be valued either at cost or at fair market value, whichever is lower. Supposing that you have been appointed as the auditor of a company. Supposing further that financial statements have been provided to you. You have gone through the balance sheet of the company. There you find that the company is having some investments. Some value is also reflected in the balance sheet against the term or against the heading investments. So the company under your audit is having some investments. Those investments are being reflected in the balance sheet of the company at some value. What is your duty as an auditor in respect of such investments? You need to check whether value that is being reflected in the balance sheet. You need to check whether the value that is being reflected in the balance sheet is correct or not. So, auditor need to check the correctness of valuation of investment. As already discussed, valuation of investment is dependent upon what? Classification. So, in order to check the correctness of valuation, first of all, auditor should identify the classification. In order to verify whether classification is correctly done or not, first of all, the auditor should try to ascertain objective. I repeat, correctness or otherwise of valuation is dependent upon classification. Correctness or otherwise of classification is dependent upon the objective. So in order to check whether investment's valuation is correct or not, first of all, you need to ascertain the objective behind purchase of investments. How do you identify or ascertain the objective behind purchase of investment? Objective will nowhere be recorded on any paper or in books. Objective will be in the mind of the management. So you need to ask the management. As an auditor, you need to ask the management about what is your objective behind purchase of these investments. Then the management will provide you a reply saying that our objective behind purchase of investment is a long-term objective, or else they could say that our objective behind purchase of investment was a short-term objective. So objectives will not be written in the books. Objective will not be written on a paper. Only entry relating to purchase will be written in the books. So even if you go through books, even if you go through all the books and other related records, as an auditor, you may not be in a position to identify what exactly was the objective behind purchase of investments. Are you able to follow me or not? So when the entity under your audit is having some investments, first of all, you need to identify the objective behind purchase of investment. Even if you go through all the books and other related records, you may not be in a position to identify exact objective, because objective will not be recorded in the books of account. If you want to really ascertain the objective behind purchase of investment, what should you do? You need to ask the management about what was the objective behind purchase of such investments. Then it is the responsibility of the management to provide a reply to your query. Then only you'll be able to get required information. Otherwise, you won't get information relating to dash. Information relating to objective. So when you go for an audit, every book, every related record maintained by the company shall be provided to you. When all the books and other related records are provided by the company to the auditor, why? The Companies Act has given second right to the auditor. The second right given by the Companies Act to the auditor is like this. Right to obtain. Right to obtain information and explanations. Right to obtain information and explanations, either from the company or from any officer of the company. Right to obtain information and explanations either from the company or from any officer of the company. Now, I ask you the same question again. Please try to provide an answer. When you go for an audit, you will be provided with all the books and other related records. Any information that you require is readily available from books of account. when all the information required by the auditor is readily available from the books of account, why the Companies Act has given another right to the auditor called as right to obtain information and explanations either from the company or from any officer of the company. For the reasons that just now I explained to you, even all the books and other related records are provided to the auditor. Even auditor verifies all the books and other related records. The auditor cannot be in a position to identify what exactly was the objective behind purchase of investment. To get that information, auditor should be given a right to obtain that information or explanations either from the company or from any officer of the company. Therefore, the auditor has been given another right called as right to obtain information and explanations either from the company or from any officer of the company. Since getting information and explanations is a right given to the auditor, it becomes a duty on the part of the company. It becomes a duty on the part of every officer of the company to provide such information and explanations as required by the auditor. One's right is others' duty. Getting information is a right given to the auditor. Providing that information is a duty on the part of the company as well as on the part of every officer of the company. Right? Now, so auditor is having a right to obtain information and explanations either from the company or from any officer of the company. They are under obligation to provide such information and explanations to the auditor. Who is an officer of the company? Can you explain me the definition of officer given in the Companies Act? A separate definition has been given in the Companies Act to the term officer. Can you please provide me the definition of officer given in the Companies Act? The term officer includes directors, any director. The term officer includes any director, manager, key managerial personnel. This is the simplest form of definition given for the term officer in the Companies Act. The term officer includes any director, manager, and key managerial personnel. Who is a director? The term director includes all types of directors. A director, managing director, whole-time director, nominee director, executive director, non-executive director, independent director, and so on. You can have a right of obtaining required information and explanations from any director of the company. Similarly, from the managers as well as from key managerial personnel. You know very well about who are key managerial personnel. CEO of the company, CFO of the company. CEO implies Chief Executive Officer. CFO means Chief Financial Officer. CS, Company Secretary. WTD, Whole-Time Director. MD, Managing Director. And Manager. The term manager is appearing both under the heading key managerial personnel as well as under the heading officer. You are having a right to obtain required information and explanations either from the company or from any officer of the company. Simply speaking, you can get required information from any person working in the company. The auditor is having a right of obtaining information and explanations from any person in the company. That is the meaning of that. Now the question is, how do they provide information? When the auditor requires information and explanations from the company, usually company will try to provide the information and explanations required by the auditor orally. If you were the auditor, don't accept any information and explanation provided by the company orally. Instead, the auditor should insist. The auditor should insist the company to provide the required information and explanations in writing. I don't accept any information provided by you orally. Please provide any information in writing. This is what the auditor should insist the management of the company. Then the management is under obligation to provide required information to the auditor in writing. that information and explanations provided by the auditor in writing. The information and explanations so provided by the company to the auditor in writing are technically called as written representations. Are technically called as written representations, which was dealt with by SA 580. Which was dealt with by SA 580. Standard on 580 deals exclusively with the concept called as written representations. I repeat, when you go for an audit, every book and other related record will be provided to you. Generally speaking, all the information that you require is readily available from books of account. However, sometimes in some peculiar cases, the information required by the auditor may not be readily available in the books of account. In that case, auditor should be having a right to obtain that information from the company. Therefore, the Companies Act has given another right to the auditor called as right to obtain information and explanations either from the company or from any officer of the company. The term officer of the company includes any director, manager and key managerial personnel. The term key managerial personnel includes CEO, CFO, CS, whole-time director, managing director, manager. Actually, some more definition is there in the Companies Act. I don't want to discuss the entire definition. This is sufficient for you because you are having very good knowledge of corporate and other laws. At least I need to assume like that. So the term officer includes all these persons. So if you were the auditor, you can take the required information from anybody in the company. However, the company generally tries to provide required information to the auditor orally. In that case, the auditor should insist the company to provide the required information not orally but in writing. Therefore, the company is under obligation to provide such information to the auditor in writing. Such information and explanations provided by the company to the auditor in writing are technically called as written representations. After listening to this, you may get a doubt. The doubt may be like this. Why should the auditor take information and explanations from the company in writing and why not orally? If you accept information and explanations orally from the company, you do not have a proof. Sometimes auditor may be required to prove that he has obtained information and explanations. If you obtain information and explanations orally from the company, you cannot prove that you have really obtained information and explanations. If you have obtained information and explanations in writing, wherein the company has signed on that paper, you can just provide that paper to any person and you can prove that in the cases required, I obtained information and explanations from the company in writing. This is the paper that I received from the company. This is the information that I received from the company. You can just go through the paper and you can identify that the paper has been signed by a responsible official in the company. Therefore, I obtained required information and explanations. This is what I can prove if I take that information from the management in dash, not in dash, in writing but not orally. So in order to save your skin, in order to prove yourself that you have really obtained information and explanations in the required cases, you need to get such information from the management in writing and not orally. And such information and explanations provided by the management to the auditor in writing are technically called as written representations. Sometimes, although the auditor is asking for information and explanations from the company may be reluctant. The company may be reluctant to provide required information to the auditor on the grounds of confidentiality. On the grounds of confidentiality. What is meant by confidentiality? The auditor is asking for some information from the company. The company is of the opinion that the information that is required by the auditor is secret in nature or is sensitive in nature. I repeat, the auditor is asking some information from the company. The company is of the opinion that the information required by the auditor from them is secret or sensitive in nature. And the company started fearing that if this information, which is secret or sensitive in nature, is provided to our auditor, there is every chance that the auditor may disclose. There is every chance that the auditor may disclose or may pass on. The auditor may disclose or disseminate or pass on this information to a third party. There is every chance that this information, if provided to our auditor, may be passed on or may be disclosed by the auditor to the third party. If that is done, the company is of the opinion that it will be very much detrimental to the interests of the company. It is very much detrimental to the interests of the company. This is the feeling of the company. I repeat, sometimes some information may be required by the auditor from the company, but the company is of the opinion that the information so required by their auditor is secret or sensitive in nature. Companies started fearing that if such information is provided to the auditor, there is every chance that the auditor of the company may disclose or pass on such information to a third party, and the company is of the opinion that if such information is disclosed to a third party, it will be very much dangerous or detrimental to the interests of the company. Therefore, expressing their fears, the company said that, sir, because of these reasons, we are unable to provide the required information and explanations to you. This is the reply given by the company to the auditor when the auditor requires some information and explanations from the company. In that case, if you were the auditor, what will you do? You tried your level best to get required information from the company. The company is reluctant to provide required information to you on the grounds of confidentiality. They are fearing that you may pass on or disclose such information to third parties which may be detrimental to their interests. In that case, how do you convince that company to get required information? In that case, if you were the auditor, how do you convince the company to get the required information from them? Do you understand my question? That is sufficient. I will give you the answer too. Okay. So how do you convince the company to get required information from them if you were the auditor? If I were the auditor, I will mention the following things to the company so that the company may get convinced and the company may provide required information to me. The point that I will communicate to the company in that case is like this. You know very well, probably very well, about ethical requirements. About ethical requirements. According to SA, I expect some answers from your side, but unfortunately nobody is responding. According to SA 200, okay, I do understand your level of preparation. I don't want to ask questions further. So according to SA 200, every auditor is under obligation to follow some ethical requirements mentioned therein. While you are conducting every independent audit, you are under obligation to follow some requirements which are technically called as ethical requirements. And as a continuation of what is mentioned in SA 200, CA Institute has issued some ethics called as professional ethics, otherwise called as code of conduct or professional conduct. You can call in either way, professional ethics or code of conduct. So CA Institute initially issued SA 200, wherein CA Institute mentioned that every auditor, while conducting every audit, had to follow some basic requirements. Such basic requirements that were given in SA 200 are technically called as ethical requirements. Apart from following ethical requirements, every auditor is under obligation to follow professional ethics issued by ICAI, otherwise called as Code of Conduct or Professional Conduct. In that professional ethics chapter, CA Institute divided that chapter into two broad categories. The first one is called as first schedule. Those professional ethics issued by the CA Institute classified the professional ethics into two schedules. The first one is first schedule and the second one is second schedule. This first schedule is having 4 parts in it. First schedule is having 4 parts in it. Part 1, Part 2, Part 3 and Part 4. This second schedule is having three parts. They are part 1, part 2 and part 3. So there are in all 7 parts. In first schedule there are 4 parts. In the second schedule there are 3 parts. Part 1 of first schedule is applicable to members in practice. Part 1 of the first schedule is applicable to members in practice. All these things shall have to be read and understand by you in your CA final. There is a specific chapter in your CA final called as professional ethics, from which you will get marks of a minimum of 16. Marks of a minimum of 16. So part 1 is applicable to members in practice. Part 2 is made applicable to members in employment. They are required to be followed only by members in employment. And part 3 and part 4 are general, which are made applicable generally to all the members. That means both the members in practice as well as members in employment shall have to follow part 3 and part 4 of first schedule. Coming to the second schedule, part 1 of the second schedule is made applicable to members in practice. Part 2 and part 3 are made applicable to all the members generally. Part 1 is made applicable to members in practice. Part 2 and 3 are made applicable to members generally. And in all, both these schedules are having 34 clauses. Both these schedules collectively have 34 clauses. Every auditor had to follow all these clauses. Of course, some are made applicable to members in practice, some are made applicable to members in employment, some are made applicable to all the members generally. If it is applicable, you must follow it. If the auditor fails to follow, any one of these clauses, the chartered accountant shall be deemed to be guilty. That chartered accountant shall be deemed to be guilty of professional misconduct. Chartered accountant is deemed to be guilty of professional misconduct and he shall be punished by the CA Institute accordingly. That punishment, as already said to you, is ranging from cancellation of certificate of practice for a minimum period of 3 months, and it may extend even to 5 years. In some extreme cases, the name of the member may be removed permanently from the register. Once your name is removed from the register, you will no longer be treated as a chartered accountant and you cannot have your name entered in such a register. This is the importance of professional ethics issued by Chartered Account CA Institute, wherein there are 34 clauses. So every chartered accountant shall have to follow both ethical requirements that were mentioned in SA 200 as well as professional ethics. All 34 clauses of professional ethics issued by the CA Institute. One such clauses, I am explaining you about clause 1. You need not, there is no need for you to remember all these things. You can understand only the point. Clause 1 of part 1 of second schedule. Clause 1 of part 1 of second schedule to the Chartered Accountants Act says like this: a chartered accountant in practice shall be deemed to be guilty. A chartered accountant in practice. I will make use of all this discussion when I am explaining the ethical requirements under SA 200. I don't want to explain those things again elaboratively under that heading. What are the points that we are going to discuss under SA 200 are being explained here elaboratively, so that you will have knowledge not only about SA 200 but also about the point being discussed. So a chartered accountant in practice shall be deemed to be guilty of professional misconduct if he discloses any information, obtained by him during the course of his professional work to any person without the consent of the client. If you disclose any information that you obtained during the course of performance of your work as an auditor without taking prior permission from the client, you will be deemed to be guilty of professional misconduct. By this, what you need to understand is you may get lot of information relating to your client during the course of performance of your work. Some of that information received by you may be secret or sensitive in nature. Therefore, you should have to maintain confidentiality of that information. You should not disclose or disseminate or pass on the information to third parties without taking permission from the client. If your client permits you to disclose information, there would not be any problem. By taking written permission from the client, you can disclose information to a third party. Without taking permission from the client, you cannot disclose information to a third party. If you do that, you'll be deemed to be guilty of professional misconduct. You need to refer this clause to your client. Why the auditor is referring this clause to the client? The client is in fear. The client is fearing that the information required by our auditor is secret, sensitive, and the client is fearing that the information may be passed on by the auditor to a third party, which is detrimental to his interest. That is the reason why you need to create confidence. You need to create confidence in our client. For that, you need to mention dash clause. Clause 1 of Part 1 of second schedule to the Chartered Accountants Act, which says that we will be deemed to be guilty of professional misconduct and we will be punished by our institute if we disclose any information to any party without your consent. So we don't disclose any information without taking your consent. If we do like that, our institute will punish us accordingly. So you can provide information to us. We are assuring you the confidentiality of that information. This is the answer to be given by the auditor to the client. In that case, generally, clients may provide information to the auditor. Satisfied with the assurance being given by the auditor, client may provide required information to the auditor. But in extreme cases, still the client may decide not to provide information to the auditor. Even after explaining all these things, the client gets convinced, and the client is still having a fear that the information is secret and hence auditor may reveal it to third parties. In that case, the client may say to the auditor that, sorry sir, even after providing all these things by you to me, I am not getting confidence. The information is secret in nature. We cannot reveal that information to you. This is the answer that may be provided by the client to you. In that case, what the auditor should do? You try to get required information from the client. You try to convince the client, but the client is not getting convinced. The client do not want to provide required information to the auditor. In that case, if you were the auditor, what will you do? Report the matter to the shareholders. Report the matter. That is the ultimate thing the auditor can do. Even after your continuous efforts, if you fail to get required information from the client, what should you do? You need to make a report to the shareholder saying that despite of our best efforts, we are unable to obtain. Despite of our best efforts, we are unable to obtain required information and explanations from the management. This is what the auditor can express to the shareholders when the auditor fails to obtain information and explanations. The term fails to obtain is having a link with the auditor's opinion also, that we will discuss in future in essay 700. In essay 700, everything is relatable to standards on auditing. If you do not have knowledge of standards on auditing, you cannot understand the auditing subject at all. So you need to be careful while listening to standards on auditing. You must get knowledge of standards on auditing to get a hold on auditing subject, without which you cannot get a hold of the subject called as auditing without having knowledge of standards on auditing. So standards on auditing are very much important for you people. So try to understand them when I start having a discussion on standards on auditing. So till now we had a discussion about 2 points relating to rights of the auditor. What are they? Can you please list down what are the rights that were given to the auditor of a company under section 143 subsection 1 of the Companies Act? Right number 1, right of access to books, vouchers and other relevant records at all times. Right number 2, right to obtain information and explanations either from the company or from any officer of the company. These 2 are the rights that are given to the company's auditor under section 143 under section 143 subsection 1, right of access to books and right to obtain information and explanations. These two rights were given under section 143 subsection 1. Another right is given to the auditor under section 146 of the Companies Act. Under section 146 of the Companies Act, what was the right given? Right to receive the notice of meetings of shareholders and to attend such meetings. To attend such meetings. I repeat, right to receive the notices of meetings of shareholders and to attend such meetings. This is a right given to the auditor of the company under section 146 of the Companies Act. You know very well that general meetings of a company are the meetings relating to the shareholders of the company. There are two types of meetings in a company: board meetings and general meetings. Board meetings are of the board of directors. General meetings are of the shareholders. Such general meetings are of two types. The first one is AGM and the second one is EGM. Whenever any company wants to hold either an annual general meeting or an extraordinary general meeting of its shareholders, the company shall have to intimate about the date, the day, the time and the business to be transacted at the meeting to the shareholders. Such an intimation to be given by the company to its shareholders, intimating about the date, day, time and business to be transacted at the meeting is technically known as notice. A 21 days clear notice. A 21 days clear notice shall be provided by the company to the shareholders. Of course, a shorter notice can also be given, provided some conditions that were given in the Companies Act are satisfied. But usually that notice to be given by the company to its shareholders must be a minimum of 21 days clear notice. And while sending notice of either annual general meeting or extraordinary general meeting by the company to its shareholders, a copy of the same must also be provided by the company to its auditor. So the company is under obligation to send notice of either annual general meeting or extraordinary general meeting both to dash as well as to dash, both to the members as well as to the auditors. Why should the company send notice of general meetings to the auditor? Because the auditor of the company is having a right to receive such notices of the meetings of the shareholders under section 146 of the Companies Act. Section 146 of the Companies Act has given a right to the auditor. What is that right given by section 146 of the Companies Act to the auditor? Right to receive the notices of the meetings. Since getting notice is a right to the auditor, providing such notice is a duty on the part of the company. So company shall provide notice of meetings that may be either AGM or EGM both to the shareholders as well as to the auditors. That is first part of section 146. Right to receive the notices of the meetings of the shareholders. Once you receive notice from the company, it becomes a duty. Once you receive a notice on the part notice from the company, it becomes a duty on the part of the auditor to attend such meetings. So same section contains both the right of the auditor as well as the duty of the auditor. What is the right given to the auditor? Right to receive notice. What is the duty on the part of the auditor? To attend such a meeting. It is the duty on the part of the auditor to attend such a meeting. Auditor cannot decide not to attend a meeting. Auditor must have to attend the meeting. That meeting may be either an annual general meeting, that meeting may be either an annual general meeting or an extraordinary general meeting. Whether audited accounts are being discussed at that meeting or not. Whether audited accounts at that meeting are being discussed or not. Irrespective of anything. Once you receive notice of dash or dash. Once you receive notice of AGM or EGM. Whether in that meeting audited accounts are being discussed or not, you must have to attend such a meeting. If it is not possible for the auditor to attend the meeting in person, then the auditor can send an authorized representative. That authorized representative may be either a partner of the auditor or even an employee of the auditor, and that authorized representative must also be a chartered accountant. That authorized representative must also be a chartered accountant. That means only chartered accountants can attend either annual general meeting or extraordinary general meeting. Only chartered accountants, either the auditor of the company or authorized representative of the auditor. That authorized representative of the auditor should also be a chartered accountant eligible to be appointed as the auditor of the company under section 141 of the Companies Act. Where the auditor cannot attend the meeting and where the auditor cannot send his authorized representative to the meeting, then the auditor should have to obtain a leave of absence. The auditor should have to obtain a leave of absence from the company. That means you need to take permission from the company for your absence from either AGM or EGM. Only when the company permits the auditor, then the auditor is not required to attend the meeting. Otherwise, the auditor must attend the meeting either in person or through his authorized representative. That is the duty of the auditor. Getting notice is a right. Attending to the meeting is a duty given to the duty on the part of the auditor under section 146. Can you now please repeat what is the duty of the auditor? What is the duty of the auditor under right and duty of the auditor under section 146 of the Companies Act? Right to receive the notices of the meetings of the shareholders and to attend such meetings. This is a right given to the auditor under section 146 of the Companies Act. Another right, it is interesting to listen this, another right is given under section 143 subsection 8 of the Companies Act. 143 subsection 8 of the Companies Act. According to this section, for example, there is a company called as A Limited. Let us assume that there is a company always in our examples. A Limited is hero. A Limited, there is a company called as A Limited. The company is having a head office, is also having a branch office. The company is having a head office and is also having a branch office. There is a person called as X. You are X, you are a chartered accountant, you are holding a valid certificate of practice. You have been appointed both as the auditor of head office as well as the auditor of branch office. Now I want to ask you a single question. The question is, in that case, do you have any right to visit the branch? Obviously, yes. It is a natural right given to you. When you were appointed as the auditor of branch office, without visiting branch or without having any right to visit the branch, how it is possible for you to conduct audit? Therefore, if you were appointed both as dash and dash, if you were appointed both as the auditor of head office as well as the auditor of branch office, you are having a natural right. You are having a natural right to visit the branch and to verify the books and other related records maintained therein, to obtain information and explanations from the branch people, and that's it. As of now, it is sufficient. Why? Because in 143 subsection 8, while I am explaining the concept of branch height elaboratively, I will also explain you some more things about this. So you can visit the branch, you can verify books and other related records maintained therein, you can obtain information and explanations from the branch people. Visiting branch in that case is a dash right to the auditor, natural right to the auditor. Yes or no? Now, the most important point, there is another person called as Y. X is appointed as the auditor of head office, not as the auditor of branch office. But Y, another chartered accountant in practice, has been appointed as the branch auditor. Do you identify any difference between the previous example and the present one? What is the previous example? In the previous case, same person has been appointed both as the auditor of head office as well as the auditor of branch office. Yes or no? In the present case, one person is appointed as an auditor of head office and the other one has been appointed as the auditor of branch office. Now the question is, if you were the auditor of head office and if you want to visit the branch, if you want to visit the branch and to verify the books and other related records maintained there, is it a right given, or do you have any right to visit the branch office? Particularly when some other person has been appointed as the branch auditor. You are not the auditor of the company, you are not the branch auditor of the company. Somebody else has been appointed as the branch auditor of the company, but still you want to visit the branch and to verify the books and other related records. If you were also appointed as the branch auditor, you will have a natural right to visit the branch. Now you are not the branch auditor, but still you want to visit the branch and to verify the books and other related records maintained therein. Is it possible for you to visit the branch and to verify the books and other related records? Yes or no? Yes. Why? I know very well that nobody is able to provide an answer for this question. Why? Very good, very good. A branch auditor is required to address his report. A branch auditor is required to address his report as well as is also required to submit his report to the head office auditor. Branch auditor is not required to address the report to the shareholders. Here he is making a report only to the company auditor or head office auditor. After receipt of all such reports from different branches, the head office auditor is required to consolidate. The head office auditor is required to consolidate all such reports. Then he has to prepare a final report. That final report is required to be addressed to the shareholders, is required to be addressed to the shareholders. That means final report is being given not by dash but by dash, not by branch auditor but by company auditor. So who is more responsible? Company auditor is more responsible. If anything done wrongly by the branch auditor, who may be made responsible for that? Head office auditor. Why? Because final opinion is being given by whom? The final opinion is being given by head office auditor to the shareholders. If something went wrong at branch level, if the branch auditor has done something wrong, then for the faults of the branch auditor, who will be punished? For the fault of the branch auditor, head office auditor may be punished. That is the reason why, although a separate person has been appointed as the branch auditor, head office auditor has always been given a right to visit the branch and to verify the books and other related records at the branch, to obtain information and explanations either from the branch or from any officer of the branch. Apart from this, some other right is also given that I will explain at a later point of time. That is right of lien. Some books, some textbooks at BCom level may say that right to signature is also a right given to the auditor. That need not be explained at all. These five are sufficient, out of which one is pending for discussion. That is the right of lien. So what are the rights of the auditor given under section 143 subsection 1? Only two rights. Right of access to books, right to obtain information and explanations. What is the right given to the auditor under section 146 of the Companies Act? Only one right. Right to receive notices of the meetings of the shareholders and to attend such a meeting. And what is the right given to the company's auditor under section 143 subsection 8? Only one right. Right to visit the branch to verify the books and other related records maintained therein, to obtain information and explanations. Another general right. There is no section for this. Another general right is given to the auditor of a company called as right of lien that we will discuss later. Now, in the tomorrow's class, I am going to discuss about the duties of the auditor under section 143 subsection 1. I said to you earlier that 143 subsection 1 is a unique section in the sense that it contains both the rights of the auditor as well as the duties of the auditor. The same section contains both the rights of the auditor as well as the duties of the auditor. I want to conclude this session, today's session, with one question. Please provide me correct answer for that so that we can continue our discussion in tomorrow's session. Can a company impose any limitations or restrictions on the rights of the auditor or on the duties of the auditor? Your answer should be no. Very good. Why? Why? Because these rights and duties are derived by the auditor, not from the company. You are not getting these rights from the company being appointed by you. You are not getting these duties from the company being appointed by you. You are deriving these rights and duties from the act under which the auditor is appointed. What is the act under which you are appointed as the auditor of a company? Companies Act. So auditor is deriving rights and duties from the Companies Act, not from the company. Since company is not giving any rights, company is not giving any duties to the auditor, company cannot impose any limitations or restrictions either on the rights of the auditor or on the duties of the auditor. In other words, even by passing an unanimous resolution, the shareholders of the company or even board of directors of the company cannot impose any limitations or restrictions either on the rights of the auditor or on the duties of the auditor, for the reason that these rights and duties are derived by the auditor not from the company but from the act under which the auditor is appointed. That's it. Now in tomorrow's class, as I said earlier, I will try to discuss the duties of the auditor. Under section 143 subsection 1, there are 6 duties of the auditor under section 143 subsection 1. That means whenever you are appointed as the auditor of a company, you must have to check, you must have to verify, you must have to inquire. 6 aspects. Auditor should make an inquiry about 6 aspects under section 143 subsection 1 of the Companies Act. They are called as 143 subsection 1 clause A, clause B, C, D, E and F. A, B, C, D, E, F. Those 6 aspects must have to be verified or inquired by every auditor while carrying out a company audit. After verifying these 6 aspects, if the auditor satisfied with those matters, there is no further reporting responsibility on the part of the auditor. That means there is no need on the part of the auditor to make a report to the shareholders that we have verified all 6 aspects, we are satisfied with the same. There is nothing like that. That means you just go through 6 points, just verify 6 points. If you are satisfied with all those points, keep quiet, keep calm. There is no need to make any report to the shareholders. However, if the auditor has not satisfied with any one of those matters, then the auditor must make a report to the shareholders. This is based on a formula. The formula is like this. If everything is right, there is no need to make a report. If something is going on wrong, there is a need to make a report. If everything is going on well in the company, there is no need to make any report by the auditor to the shareholders. If something is going on wrong in the company, it is the duty of the auditor to make a report to the shareholders. Based on that principle, this point has been evolved. So, as an auditor under section 143 subsection 1, what is your duty? You need to make an inquiry into 6 aspects. After making an inquiry into 6 aspects, if you satisfy with all those points, keep quiet. There is no need to make any report to the shareholders. That means auditor's report do not include section 143 subsection 1. If the auditor has not satisfied with these matters, then you need to make a report to the shareholders. Understood?